Hello and welcome to CMC Markets Weekly Trading Outlook for June the 1st, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is the Super Bowl of trading. And I don't mean to use hyperbole here, but really, this week could be potentially huge for trading, especially Friday, June the 5th. It's a day that a lot of the big stories that have been playing out and driving trading over the course of this year all could potentially come to a head. The run-up to this as well throughout the whole week has the potential to be really active for trading. So for traders, this is like being kids in a candy store. This is the week where we could have a huge amount of major market moving developments that could send markets moving in different directions at different times. So really a lot of potential activity this week. How's it all coming together? Well, the first we'll start off with, there's three big events on Friday that we're leading up to. The first one is, Friday is the first deadline in June of Greece's IMF payments. So we've got to make 4 IMF payments over the course of June. The first one is Friday, June the 5th. So over the course of the days heading into that, we could see quite a bit of action in the euro as well as European indices, as people wonder, is Greece going to be able to make it or not? Is Greece going to get a deal or not? All through this week, we've got Greece on the one hand saying that they're getting close to a deal, and everybody else saying you're nowhere near close. So there's all kinds of contradictory stories and rumors and information out there. And this week we saw quite a bit of action on that in different statements, and expect to see more of the same in the coming week. And if anything, it could ramp up even more as these key dates start to approach. So looking here at euro dollar as an example, it had been coming off through much of May on concerns of that perhaps we may end up with a Grexit after all. However, in the last couple of days towards the end of the week, when there started to be some signs, at least coming out of Greece, of progress, the euro started to rebound again, bounced up off a higher low here, held this 108.60 Fibonacci level. However, still stuck below 110. 110 remains a key level for the euro dollar. It's still below 50 on the RSI. If it can break out, next resistance around 111.10. As I said, next support down around 108.60. The euro and looking here also. Heading into the weekend here, we've got this the DAX, and something interesting. So I just wanted to quickly show on euro dollar here. That's intriguing. On euro dollar here, we have clients net short on the client sentiment, but if we switch over here to the Germany 30. We've got clients still net long, which is quite intriguing on a day where we're seeing the DAX take a pretty solid hit. It's been falling back ahead of the weekend. Once again, we've got people pulling money out of European markets on concerns about what could happen with Greece here. DAX about 2% on the day, but still fairly solidly in clients in favor of the bullish side. So is this a short-term thing? Can we get a bounce like we have in euro in the euro over the last couple of days? It's a possibility, but look at this. RSI is turning under 50. If this starts to break this 11,433 or this 11,400 support zone here, this could be in trouble. Next support's down at this double bottom around 11,180 for the DAX. The second of the three things that we're seeing playing out this week is U.S. economic data and U.S. reports. I'll move now to the U.S. 30 as an example. The big one on Friday is the U.S. nonfarm payrolls, which is always one of the biggest economic reports of the month for the United States. But even ahead of that, we get ADP payrolls and other reports for the U.S. The big question for the United States remains: will they or won't they, and when they, for the Fed starting to raise interest rates? The signs of an improving economy move up the date for interest rates, lift off. Signs of a weak economy push things back. We're seeing here on Friday, the last day of May, that the U.S. 30 has taken a fairly sizable hit on the day, and it's broken down below 18,000, although it hasn't managed to climb back up above it here. But look at this. We are seeing RSI turning under 50, and it's looking weak here as it tests this trend support. And what do we have? Chicago PMI, one of the leading indicators, showed a significant contraction in May, and this was quite a surprise after the rebound in April. A lot of people, including the Fed, had been counting on a strong second quarter rebound to lift the U.S. economy out of its winter doldrums and set the stage for interest rate hikes. If this Chicago PMI data comes through with the national manufacturing PMI on Monday, service PMI on Wednesday, if we continue to see weakness across the U.S. economy, this could force the Fed to to delay. So two things people will be looking at this week: PMI reports and payroll reports. Payroll reports, ADP on Wednesday, non-farm on Friday, and later this month is another big U.S. Fed meeting. Theoretically, they could raise interest rates. Most people are thinking that they probably won't. But also this month we get the member projections. It's going to be hard to see how the Fed members would be able to raise interest rates when, as in March, they've been cutting back on their projections. If they raise their projections, then possibility of a rate increase. If they don't, or if they cut projections again, pushes the liftoff off. So, big week for the U.S. related to Fed speculation, particularly around the purchasing managers as well as the employment figures. So, looks like a big week there for the U.S. The final area we have, and the third thing that we've got going on Friday, is the OPEC meeting. The OPEC has been quite significant because we had this huge sell-off in crude oil. I'll take this out a little farther here. So massive sell-off in crude oil on the OPEC-driven supply war. Back in November, you'll recall the OPEC had a meeting where even though oil prices had been heading down, they refused to cut supply, and guess what? Oil prices kept right on going down. At that time of the meeting, it was in and around 80, and it ended up bottoming out closer to 40. So OPEC meeting could have a huge impact. Now, over the last few weeks, we have seen crude oil recover, particularly through the latter part of March and April. It's kind of leveled off around 55 to 60 in May here for WTI. This is significant because what we've seen coming out is that while the lower prices forced the Americans to cut back exploration and production, the big OPEC companies haven't cut back at all. In fact, they've been ramping up. Saudi Arabia's increase in production has been more than the U.S. cut production. Still, we're seeing the oil price actually rebounding here. So how much of this is an improvement of the supply-demand picture, and how much of this is just a typical trading bounce? So far, it's increasingly looking like this was just a normal trading bounce, about a 23% retracement of the big sell-off here. We could see things level off. If OPEC doesn't cut production, if they keep it up and they keep the supply war going and the market share war going, we could see crude oil turn back down, because at some point, crude oil is going to get to a point where the Americans are going to say, well, look, we can make enough money at this, and OPEC certainly isn't cutting production, so why should we? So if it is possible, we could see oil price rallies get capped by the threat of increasing renewed American production, and we'll see what happens. But so far, today, on the Friday here, Friday, May the 29th, we are seeing that falling U.S. inventories have been helping to support crude oil prices, but heading into the week of the 1st, it's all about OPEC. So we could see swings throughout the week as speculation grows on what OPEC does, or if they try to kind of deal with other people like the Russians or the Mexicans or who have you. We could see some of the other swing producers. So we'll see what happens there, if there's any horse trading, or if they just stay focused on keeping production where they are and trying to squeeze the higher cost shale producers out of the market. So those are three of the biggest events, but they're certainly by no means the only events. There's a lot of other things going on affecting other countries. It's also a big week, for example, for data from Australia, and I'm going to bring up Aussie dollar here and talk about that. The RBA has a meeting this week, and that's actually one of the earlier things that happen at the beginning of the week. The other big thing at the beginning of the week we'll find on the weekend is on Sunday, Italy is having regional elections. We saw last weekend with the Spanish regional elections that the establishment parties did really poorly, and the EU skeptic parties doing extremely well. Does that continue into Italy as well? That could throw another monkey wrench into the work and into European markets as we go through the week. But initially, also there's a focus on Australia. It's Tuesday morning in Asia Pacific, Monday night in North America. RBA meeting. The Aussie's been under heavy pressure for the last few weeks. Here, dropped off pretty significantly from 81.75. Down below 80 and on towards 76.50 here. Big support for the Aussie dollar in and around the 75.50 level, with more at the 75 round number. RSI has been pointing downward, with indicating an increase in selling pressure, and we are seeing here on the client sentiment side that clients are have been net short in the Aussie dollar, and it's been growing. So there's quite a bit of pessimism around the Aussie dollar this weekend. However, nobody's really expecting the RBA to cut rates again. They've gone through a series of interest rate cuts, and so if they did come out with a rate cut, that would be a surprise to markets. If they don't, then that could shore up support for the Aussie dollar here. First resistance on a rebound up in at around 77.50, then around 78.15. So we could see a flurry of activity in the Aussie dollar on the RBA meeting. But on top of that, the dollar may remain active right through the week because there's all kinds of Australian economic figures coming out. Following the RBA meeting later in the week, there's GDP, there's trade balance, there's retail sales. So we could see quite a bit of action in the Aussie dollar. Trading in sympathy off of that, we could see also a lot of trading in the Kiwi dollar. We actually have here at the end of the week a big breakdown for the Kiwi dollar, taking out support here at 71.75, continuing to drop and opening up the possibility of a retest of this 70-cent round number here. Kiwi dollar has been under heavy pressure in recent weeks as well. The speculation that the RBNZ could come along and cut interest rates, considering they raised rates four times in 2014. The RBNZ has a lot more scope to cut rates right now than the RBA and some of the other central banks. So this could keep the pressure on, and certainly any dovish talk out of the RBA could also keep pressure on the Kiwi dollar as well. So that looks to be another particularly active market as we go into the first week of June here. I'll also cover off cable here because we do have a Bank of England meeting now that we're getting past the UK election, and we'll see what happens here about when if the Bank of England is prepared to make any changes. They've been talking about starting to raise rates in the middle of 2016. Does this get moved forward or backward, or any kind of talk that way? People will be keeping an eye on. The cable here has had to drop back from a peak just above 158, back close to 152. It has found some support above this Fibonacci level, but we're getting a conflicting signal out of the RSI, which is suggesting the momentum still turning downward. But it does appear to be trying to level off. We'll see what happens this week. Certainly, not only could cable be active, but Euro Pound could be active with everything going on the continent this week too. So keep an eye on that. The other major market I wanted to talk about was Canada, and we'll peek at you take a look here at U.S. dollar CAD. The loonie had weakened quite dramatically here on the Friday, picking up above briefly above 125 before slipping back. Canadian GDP came in weaker than expected at about 1.5% for March, rather than the 2.1% growth that the street had been anticipating. So we did see the loonie weaken on that. This week there is more Canada news. It may get overshadowed by everybody else's, but Friday is the Canadian employment report, comes out at the exact same time as the U.S. employment report, so we could see the loonie active off of that. Also with the OPEC meeting, and the oil price could also have the loonie trading quite actively throughout the week. So it tried to break through 125, failed. RSI is leveled off, suggests perhaps the upward momentum might be leveling off here. If we do see a pullback, first support in and around 124, and this Fibonacci level here plus the 50-day average about 122.80. If you do see a rally here, about 126.60. So we are looking here at also a potentially active week for U.S. dollar CAD. The bottom line, there is a ton of economic and political and other news coming out over the course of this week. This looks like it could potentially be a very volatile week, which could create a lot of opportunities, both for bulls, both for bears, across a number of markets around the world. As I said, this week has the potential to be the Super Bowl, the FA Cup, the Grand Final, the Grey Cup, the World Cup Final, all rolled into one. This could be the biggest week of the year for trading.